Good morning, everybody. How's it going out there? Good morning, Arthur. Good morning, John. Good morning, Valerie. Good morning, Kimberly, Al. All my noodles. If you're new to the stream, make sure you give me a shout out. Love to have you. You do have to subscribe to be able to join the chat. But hey, there's worse things you can do than to click the little subscribe button, hit the little bell for notifications when I go live, and join us every day for what's moving in the market. Now, today we have the main event, the FOMC, right here on the calendar, highlighted 2 p.m. Eastern Time. And then Jerome Powell can't resist talking about it, so he's going to go live at 2:30 p.m. Eastern and talk about it. Hey, Alan, glad to have you. So, this will be a market-moving event. Is it going to move up? Is it going to move down? That's the big question. Right now, the market looks poised to go up no matter the decision. And we may see a retrace. Typically, the price action is in 3 moves. We get an initial crazy move that pretty much stops everybody out that might be day trading. Then we get another big move that's opposite whatever move, the big move is usually violent, goes up and down, and then we get a little run, then we get a retrace, and then we get a resumption of the initial run. That's just the typical pattern that happens. Morning, Pat. Morning, Dan. Glad to have you. So, a 3-wave move is typically the way the FOMC reaction happens. Now, does that mean anything else? Well, last year, most of the FOMCs were reversed the next day. Not all of them, and that's certainly not a rule that I would trade by, but just be cautious that if we do an outsized move, we may retrace all or part of it tomorrow. All right, I'll be back with you, of course, Morning Monster, ready in the morning, and update you what I think is going to happen after we get through all this. But I just want you to keep in mind the parameters of the day, likely to be rather lackluster up until that 2 p.m. time frame. 2:30 will be another spark of volatility. When Jerome Powell gets on the stage and starts talking, they release his minutes or whatever, and the bots go crazy. And so just be careful. Now, one of the things that I wanted to bring to your attention, and we haven't even talked about the disclaimer yet or anything, we have earnings. And Nike announced, GME announced, lots of these are movers of the day. Ollie's announced this morning, Petco, and Shoe Carnival, not huge name companies, but we do have Chewy, which tends to be a rather big mover tonight. And then we have General Mills tomorrow morning. So, we're kind of wrapping up this quarter's earnings, and we're going to start on next quarter's earnings in April. So usually the pattern is to watch money flow into financials and then into tech. Well, financials not exactly the best place to put your money right now. So we're seeing money just kind of skip financials and head over into tech already. So these are some things to keep an eye on. These ones that are moving, make sure you know. I post this in Discord every single week. So just so you're not caught unaware of what's happening. All right, let's see. Let me pull up one more chart out of the Trader Talk channel. Oh my goodness. This thing jumped all the way back up there. All right, right here. I just thought of this that I wanted to show. Check this out. CTAs. Now, everybody says those computer trading algorithms, the things that read the news before we can even have a split second to digest it ourselves, they're already making trades. I mean, it reads it, starts reacting. It just came off of their worst 3-day performance in over 3 decades. Think about that a minute. Like, these are professional trading algorithms. I mean, this just had, everybody says, oh, the bias in the market goes with this is CTA's computerized trading algorithms. Let's get this framed correctly. It's not the commodities trading advisors. This is computerized trading algorithms. So this is automated trading programs. They just had their worst 3-day performance by Bank of America estimate. Their 3-day rolling returns was negative 10%. That is pretty horrible. That's like turn off the machines horrible. All right. So people that think that the CTAs set the bias for the market, well, CTAs obviously wrong right here as we drift higher. And they could be more wrong as we continue to drift higher. And we can see a FOMO rally like we have not seen if the market starts breaking out higher. Now, 4,300 is our resistance above. Just keep your parameters in mind. All right. Wanted to warn everybody and kind of set the stage for this. All right. Just because they're professional trading doesn't mean they're right. And right there, sucking down the worst 3-day performance. And that's an average performance in over 30 years. Going all the way back to the dot-com days. Yeah, not even in COVID was this bad, all right? The CTAs held up really well in COVID. All right, moving on. Remember, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation, informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument, or otherwise. And if you desire that personal financial advice, hire and consult a financial advisor. Popping on through. S&P holding up, inching higher. We break out over this zone up here. It's probably game on for 4,300. That's 300 points up. That's a long way. That's a big opportunity to make some money. And we probably will find some resistance there. It's highly likely we see resistance there. If we get there, when we get there, we'll probably get a retrace back into the top of this zone right here. Probably pull this over like this. So we'll probably see at least a retrace back to this 4,100-ish area. It's just likely. It's what these things do, all right? Now, it doesn't have to. We could just break on up, reach some of these higher targets, and then retrace back to this area from where we broke out. This is going to be a kind of a breakout. We've just been consolidating since August in this little zone right here. We haven't gone anywhere for 2 years in the market. If you zoom it on out, we're at the same place we were back here in March of 21. We are now in 23. That's 2 full years of going sideways in the market. Just put it all in perspective for you. If we can break out of here, it's going to be a beautiful FOMO rally like we haven't seen in a couple of years, maybe 3 years. All right. Moving on. Go back. Let's use the right charts here. S&P 500 breaking over the daily roadmap line. This is the roadmap line. If you want that indicator, links in the description down there below me. All right. Now, what does this mean? Well, it means we're above the initial resistance, but we do have this rejection right here where we popped up and 1, 2, 3, 4, 5, 6 days in a row we went down. So we got to beat that high right there if we're going higher. That's the first resistance point. The FOMC may just be like a rocket ship, and we can't even comprehend what happens. So just be aware. And we could also come back down and retest these lows. That's also entirely possible. We could come back like this, or we can break out like this up to that 4,300 area. We do have resistance levels above us. Be careful. Know your parameters. All right? Can't say that enough today. This may be the most important FOMC that we've had in a lot of years. And right here, coming up to the top of that orange box, this is the orange box that we've had since all the way back here and formed it in November. We just keep playing around, testing the tops and the bottoms of this box. We're sitting right at the top of the box. We do have that little resistance on those tails, similar to the S&P 500 chart. the SPX chart. Right there, that little high. Got to get above that to break out of here. And this little high, spike high from the FOMC. I think it was FOMC. It was either FOMC or CPI. I can't remember which one it was that day. We spiked up and dropped right down in here. Came back up, retested it. Dropped right back down again to that same zone. Third time's a charm. We'll see. Just be prepared. We've seen some giant moves in the last couple months on these kind of on CPI and on FOMC days. NASDAQ right up there where I thought we might find some resistance. We may see a pullback. I've drawn this for a couple days. I don't even remember when I drew this. It's been on there a couple weeks, I think, now at this point. We may see a pullback back to the roadmap line. I've had that roadmap line in there pretty good. It was kind of floating along. We may see it retrace back to there before we can break out, and that may happen in a flash. Like that may be like the stop out, flash, retrace, and then go. You might be saying, whoa, that's like 700 points. Well, we can definitely see that today. 700 point drop and then a blast off. All right, just be prepared for what kind of moves happen. This thing is set up to go bullish. I'm kind of leaning toward the bullish side. I'm at 78% bullish reaction out of the Fed today. I've been known to be wrong before. So don't bet all your money on that. Make sure you know your parameters. Make sure you know your stops. Don't bet on me. I've been wrong before. As the disclaimer said, past performance is not necessarily indicative of future results. So be careful, please. All right, the account you save may be your own. The smart thing to do could be cash until this resolves. Now, Russell sitting down here at the lows, consolidating in this previous consolidation area from December. It did make a lower low than we've seen this year. So this one kind of resets where it's at. This was a bigger correction, but this is also a measured bounce type setup. Put that high to the high. This is a measured bounce type setup. We start breaking out over 1830 on Russell. We can get a massive rally all the way up in this 2000 area. So, morning, Patrick, Val, Jason. Glad to have y'all. So, there's the parameters. Okay. Know where you're at. That right there was a big three-wave up. Makes me leery. That can be either a three-wave up or a 1-2-1-2. This did make a lower low here than was back here. So this has got me very cautious on this pattern getting continuation right now. Kind of mucked it up. Now we can get a little bit of overlap here, but we gotta see this breakout, get out of here if it's gonna go higher. Now the NASDAQ and ES can kind of leave Russell in the dirt, but it's not highly likely. Usually we kind of suck everything with us as we go. And the banks are kind of weighing heavily on Russell. Most of those smaller regional banks are in the Russell. Now, dollar continuing to try to push lower. Couldn't get much continuation yesterday. Found a little support in the support zone. Might take us a few days to push on down and test the bottom of this. We'll see. Likely we get an outsized move on the dollar again at 2 p.m. as the world digests everything. So GME announced earnings, getting a crazy pop. They're losing money. I mean, I don't even know. They do a lot of turnover, $2 billion, but still can't turn that into bottom line profit for whatever reason. They reported profit, but I don't know. They've had a hard time. So maybe that's the deal. They actually reported profit after losing money forever. So need to see that continue. The estimate negative 13 cents, and they actually managed to pull it out. I don't know. We'll see. Obviously, they had some kind of positive outlook back over the roadmap line here, back over this high. We still have this crap to contend with that we did back here, sitting right above us. So watch out. That was a big rejection right there on GME. That was one day. Spiked up there and rejected. And that wasn't even that long ago. It was just back in the fall. We're not even talking about the giant, freaking massive spike that we had back here. All right. Be careful. if you're chasing after GME. Adobe, getting hit just a little bit, looks like. We've got to get above this high up here. Now, it looks like we can rally right on up there after a little maybe retrace and then pop right up here. That's definitely a rejection. You see how it gapped up there and then fell right back down out of there and continued lower, making that retrace. This is, oh, is that the market open? Yep, market's open. Hey, TSL, Tesla's moving. All right. That was a measured bounce setup. This thing has the potential, has some potential to get up to this 446 area at the minimum. That would be that prior high. It's kind of funny they come out together. And then if it's going to go bullish, it can extend out to this 500 area up here. Just based on this little setup it's got right there. It's got to break out above this high first. Above 400. All right, KRTX. Looks like a crappy chart. Just grab the morning movers. Ollie announced earnings. Looked like they got a pop. Gonna retrace it. Looks like made money. Did some business. Popped up and potentially gonna retrace that back. It's got a large. This is a range it's been in since what, July. It's got a large playing field there. So. Yeah, I just had the regular monster today. Yeah. All right. Got some pep in my step this morning. All right. Yeah, the beast, the hard monster. I still got the can on the desk here. No caffeine. So anyway, Spot getting a little pop today. I don't know. Let's see. Looks like they've got some kind of, I don't know, reacting to some kind of news. Still chugging here. It's eventually going to get a retrace back to the roadmap line. This little extension, let's see, let's draw some fib and do what kind of extension maybe we could see here. Yeah, be careful. It may find resistance at this 132, may come up to 137, and that may be it for right now. It's kind of inching higher, smaller little corrections and extensions. Eventually, it's going to make that bigger correction. All right. Hadn't really had a giant pullback since it came off the lows. So be careful on Spotify. ETMB, nice pop up on whatever the news was. Who knows? Pharmaceutical, probably some drugs, something news. EMPH, probably going to continue the lower march here. Even though we get a little pop today, looks like the pop's going to be limited. Remember, these things tend to, we get these repeatable kind of swing ups and then extension down. A lower low each time. Lower low, lower low, lower low. Unless we can get above the roadmap line up here, where I've got the alert at 240, probably going to see lower low. Targets down here around 150. If I can get down there, we could potentially get some kind of reversal going on EMPH. Cold. Moving up off the bottom, but I don't know. That looks a little crazy right there. It is a bounce off the roadmap line. That big red candle yesterday, though, does not give me the warm, fuzzy feeling. UNG just hanging out at the bottom here. I don't know. That return to the lows. NG1 exclamation point. I always tell you, go look at the underlying. The underlying is natural gas. Not making a lower low here. This is technically pushing the bounds of a measured bounce type setup. We'd have to break out above 250. That could set it up to run up to this $4 area potentially. 350 at the most bearish if it's going to roll over and go lower low. TMV, what was that, 20-year treasury, 3x bear, whatever. This looks like it's just consolidating sideways. WGO just looks like that one's consolidating sideways. RV sales probably not the best in the raising rates environment. HSBC looks like a bounce off the roadmap line potentially on that. That's a bank, major bank. So watch that one. That one can recover quickly, actually. especially if it's not caught up in all this junk. And looks like it might, a little shy of being a measured bounce type setup. A little shy. CVNA getting a little bitty baby pop on something about exchanging unsecured notes for secured notes. Doesn't look like a positive chart to me. I mean, that looks pretty bad. I would avoid Carvana. I mean, you can maybe make a couple bucks on a pop, but that's not my kind of trading. AKRO back down to the roadmap line. Pharmaceutical could bounce here. Be careful. That's all I gotta say on that one. Nike announcing earnings. Beating on the top, beating on the bottom. Yeah, when I say top and bottom, that's the top number. That's the earnings, and the bottom number is revenue. So beat on both of those. Beat the analyst expectations quite handily too, almost by 50%, 40%, and 7% on revenue. And the outlook must not have been the best though, because not getting a giant pop. Just retracing. We got to get above this resistance, that 618 resistance right there. We're going to pull it right there. We stopped right on it yesterday. If we can clear this high right here on Nike, we start getting a move up through 128 today. This thing can start going out to 135, 141. Probably take a few days to get there. You can see this little move up was swift. 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 days or so. So we could see a pop right up in this area pretty swiftly if it can get positive action. Looks like it's going to go back and fill that gap. If it finds support there and bounces, that might be a runner later in the day. Baidu just consolidating in this zone between this resistance and the support that is the roadmap line. Google, yeah, broke above the roadmap line. Got to get above these highs to get continuation higher. I think the FOMC is really going to tell us, and the next level up here is around 122, 123 on Google. DWAC continuing its march lower. It's right back to the SPAC price, basically right around that $14, $15. Looks pretty bad. Doesn't look long-term bullish to me. All right, that's kind of the list today. Bias for the day, neutral until the FOMC. Big bias, bigger picture. Still bullish, 78% bullish. What is that, 22% bearish? Potential. That lower low still hangs in here. This is like honesty time. This is like the worst place we could possibly be heading into the FOMC as far as clarity and the direction we're about to go. This right here with that lower high can lead to a lower low. This right here with the higher low can lead to a pop up to that target that I've been talking about for freaking forever, for 3 months now, 4 months, I don't know. Just be careful today. I'm 78.22. I'm 78% bias long. All right. That's my odds right there. 78% we pop out of this. Now, I'm not talking Fed, whatever they announce. I'm not talking that. I'm just talking about market reaction. 78%, this is a bullish pattern. I would feel a lot better if we were up here, that we're going to continue bullish. But right now, this is a very dangerous spot. It's a red zone for a reason. I color these orange boxes all the time. This one's a red box for a reason. This is a dangerous spot for the S&P to be parked right in the middle of. All right? Now, I do warn, a surprise cut in the rates can be like napalm, whatever, nitroglycerin on the fire, and we could see a 20% rally like we saw back in 2001. All right, you might say that's crazy talk. Well, history says when there's a surprise cut that, especially tech, NASDAQ back then in 2001 saw a 20% rally. All right, the market totally unexpected, did not expect a Fed cut at all, and we saw a 20% rally. So that can come out of this. All right, so be careful today. I'm not saying we're going to see a 20% rally. I'm just saying the reaction can be crazy. Might not make sense at all. This is a bullish pattern. It's a nested 1-2-1-2 setup, but we don't have confirmation until we're above this level up here and we're parked right below it. This can also be a failure pattern and we go lower. So it's tough. I cannot stress this enough that it's tough right now. That's why I've been wishy-washy on a lot of my predictions and stuff, is because we are stuck right in the most dangerous zone right here. Right ahead of a major announcement. It's like this is why I say it might be one of the most important Fed announcements, even though I don't believe in news, but the rest of the market loves a good story. So, all right. No, we haven't done those yet. I was trying to figure out how to get the schedule. I'm not a big Zoom meeting person, so I'm trying to figure out how to set that up so you guys can pick which one you want to join. So we'll have that out soon. I'm trying to learn something new. That's not I don't do corporate meetings and invite people, so I'm having to learn some new tools. But we'll get that out soon, Pat. All right. It's kind of on me and Kimberly, so we're setting that up. All right. Thanks for coming, everybody. We'll see you again tomorrow. Maybe I'll do, I don't know, maybe if I feel some need to go live this afternoon, I'll do it. But stay tuned in Discord. I'll keep y'all up to date as this thing unfolds this afternoon. All right? And have a great one, everybody. We'll see you again maybe later today, maybe tomorrow. I don't know. Make sure you subscribe, hit the bell with the doodads so you can get the notifications. And I'll see you guys later.